What's going on, guys? It is Tex. Today is Wednesday, July 17, 2019. Thanks a lot for joining me in this video lesson where I'm going to go over how I am using a combination of the futures, the market profile, and market internals to gauge my trades on the SPY. This is a new system that I'm still very much learning. As I've discussed in previous videos about the market profile, I'm still very much learning about that, but I was able to formulate a solid trade plan today and really executed it just perfectly. It was just one of those days where everything fell into alignment and really gave me a lot of confidence in the potential of the system. So I just wanted to kind of share that with you today. And with that said, before we begin, I'm going to show you actually started a blog. You can see it's Market Talk with Tex. The address is tex-trading.blogspot.com. Feel free to go over there and check that out. I may not post every single day, but I'll certainly try to post as frequently as possible. You can see today I did post a pre-market report, just my thoughts on the futures market, the profile from the overnight session, talked about a possible scenario that I was looking for today, which definitely played out. And I talk about key levels from the market profile. So if you want to head over and check that out, feel free to do so. An obvious disclaimer, I am by no means a financial advisor. I'm just simply posting my thoughts on the market for your entertainment purposes if you want to check that out. So with that said, let's bring the market profile over here, and I'm going to kind of go over what I was looking at this morning. So we can see if we look at the overnight session, we were basically in balance with the previous trading day. In other words, all of the trading that occurred in the overnight session was within yesterday's trading range. As you can see here, we did put in an overnight low that cracked yesterday's low of day. But more importantly, I'm noting yesterday's low is technically a poor low. And what that is when you have a lack of excess single print TPOs. For example, up here, yesterday's high, you can see we have 3 single print TPOs. So that constitutes an excess high. You need at least 2 single print TPOs to be an excess high or an excess low. As you can see, our low from yesterday, we have no single print TPOs, so that is a poor low. That's important because any poor low or poor high will generally need to be repaired by the price coming down into that level to test it on some subsequent day. So coming into the open today, I really liked the potential for a pop into the 30.08 area on the futures and a rejection to consider a short position. Now, I liked 30.08 because that's roughly where yesterday's volume point of control is. As you can see, this green row of TPOs here indicating that. Also, you've got the halfback position from the overnight session sitting right there in that area as well. I mentioned in my blog post the 30.08 area as a possible scenario for a short, but I was also willing to consider a short all the way up around the 30.14 because that is the value area high from yesterday. However, I really felt it was going to be unlikely we would get up that high because that was quite a ways away. I wasn't going to take a short at 30.08 and give it room all the way up to 30.14, but if we had ripped fast and hard with speed up into 30.14 right off the open, I would have considered a short at that level. Otherwise, what I was really looking for was a pop into the 30.08 area, rejection, and taking the short there, looking for our first target down here at the previous day's low in order to repair this poor low. I also mentioned in the blog that if we could find acceptance below yesterday's low, there is potential to the downside, and I would be projecting as low as 29.79. The reason I said that is because that is a virgin point of control that is yet to be tested from back here on July 9th. Now, I wasn't really clear about it in the blog, and I probably should have been more clear about that. I wasn't projecting that to happen today because obviously that is a long ways away. But if we are in fact starting a bigger pullback here, I would definitely be looking at a test of that level here in the coming day or so. So we'll have to see what happens. I mean, at this point, we're kind of holding up from the low that we set in this morning. But overall, my thesis being short on the day was pretty much spot on. So let's take a look at the chart for the futures here. I'll just drag this over. And I did post a screenshot of this in my blog, kind of what I was looking at. So as you can see here, the past couple of days, we've started putting in some consecutive lower highs. So I did draw this trend line here, and then we really started to steepen up here. So I added the second trend line, and I think both of these trend lines were in the screenshot I shared. And then just before the open, I added a third trend line because you can see that coming into the open, we were really starting to steepen up our down move here. And what I really liked about this is you can see that this third trend line I added was really converging perfectly with both the volume point of control, this yellow line here from the market profile, as well as, just that general 3008 area that I was talking about. I really liked how that trend line was converging with that area. So I liked the amount of overhead resistance we had here. Now I realized that it was possible we could have pushed up into this area, which is the pivot point on the day and a culmination of this other trend line that I have drawn here. But, basically we didn't do that. We did ultimately reject. We technically hit a high on this candle of 3009.25. So I was off by a little bit, but pretty darn close. 3008 was the level I was looking at rejecting off of. And ultimately we did end up rolling over there without even remotely trying to push up to that value area high. So whenever I take a trade, as I've mentioned before, I don't currently live trade the futures. I would like to get to that point, but at this point in time, I've only taken a couple of paper trades on the futures. But today, I wanted to use this system to gauge a trade on the SPY. So I did take a live trade on the SPY. I bought some puts, went with a 300 strike price with Friday's expiration date. And because I am trading the SPY, you still have to look at the SPY chart. Obviously, that is the instrument you're trading. But what I'm doing is I'm using the futures chart, the market profile, and market internals to gauge basically my trade plan, my thesis for a trade on the SPY. But I still have to look at the SPY chart to really nail my entry and my exits. So, like I said, coming into the morning, that was the plan looking at the futures chart, but now we need to go look at the SPY chart, and I'll show you where I was able to get in. So let me grab my drawing tool here. So everything inside of this box roughly was the first 15 minutes of trading. So we were looking at a 15-minute chart on the futures chart. So that first 15-minute candle, this was everything that occurred on the SPY within that first 15-minute candle on the futures. And when I initiated my position was right here on this candle. When I saw us push up into the 50 EMA and then reject, putting in a lower high, almost like a little mini double top, that's when I decided to go ahead and initiate my position. I bought the 300 puts right there. And my obvious risk from a technical standpoint off of the SPY chart here would have been a break of the high of this candle. But really, because it's so close, I was willing to give it room up to the pivot point on the day because that's also right around that 300 whole number. It's not that far away, and we could have easily whipsawed up to there. So that was the breathing room I was willing to give it. That was my technical stop on the SPY chart, given that I was trading the SPY puts. But I used the futures chart and the market profile for my trade thesis and the internals, the market internals, for the conviction in the trade as it was progressing. So I initiated my position there, never even came close to stopping me out, as you can see. And my first profit target on the day was the previous day's low, this green line indicating that. Because that's also right about where the previous day's low is on the futures. And I had mentioned that that would be our first target because we need to come down there to repair the poor low from yesterday's session in the futures market. It's also an obvious bounce area. Previous day low is a clear area where you would want to cover some of your position. Smart shorts are going to do the same. And it could theoretically hold support, and the market could have pushed off of that level. So you've got to pay yourself when you come into a major support level like that, but leave some on in case, the trade does work out according to your thesis. So I took half off into that previous day's low right there, and then I just sat tight. I was perfectly okay with this retracement right up into the VWAP, especially as I was seeing it struggling underneath the VWAP. And all throughout this period, I was just getting more and more conviction in the trade. However, I did not add to the position. I did not want to add to the position until I got confirmation of acceptance below the previous day's low. So as you can see on this candle here, There was the wash that I was looking for. We clearly broke down below the previous day's low, and then we basically consolidated, forming a beautiful little bear flag right underneath the previous day's low. So right here is where I added back to my position. So I added back everything that I took off over here. I added it back here. Now, since I added to my position there, my stop was no longer going to be all the way up here. You always have to reassess your risk anytime you add to your position. So I moved my stop. Basically, my stop was going to be if it pushed up into the VWAP, came down, held the previous day's low as support, and lifted off of that, I would have gotten out of the trade. That would have been the signal for me to get out of the trade from a technical standpoint on the SPY chart. There's no way adding here I could give it room all the way back up to high of day. This is not what I would want it to do. This is not what I expected it to do, so I would have gotten out of the trade. But, obviously it did exactly what I expected it to do, and it failed immediately after I added to my position. Nice, big, beautiful wash right there. But I did not cover any of my position on this wash here because at this point I had high conviction in my target being hit. And my target was the 9 EMA on the daily chart. As you can see, these purple dots indicating the 9 EMA. It has often provided support on the SPY. Sometimes it cracks below it. But a lot of times it will hold that 9 EMA as support. So it's a very important level that you always have to take into consideration. And anytime we get extended away from the 9 EMA, you'll notice that it will often want to pull back down into it and either hold it and move higher, or we get a move down below it. But it will initially hold almost all the time. So given where I got in, it was a very reasonable profit target from a technical standpoint. All right. And I believe at the time the 9 EMA moves in real time, but I believe at the time the 9 EMA was sitting right about here, if I'm not mistaken. So with that in mind, when we got this crack after I added to my position, I was watching very closely the market profile. So if we look at the market profile, what I noticed is look at this huge increase in volume, right? So as we cracked and this volume really just started to steadily increase, that really gave me conviction that we were going to continue lower. This is telling me that more and more sellers are coming in, and most likely the price is going to continue lower, and most likely it's going to hit my profit target. So I just absolutely found it so easy with that information to really sit tight and wait for my profit target to get hit. Further, if we take a look at the market internals, one of the things that I really pay attention to is the NYSE tick. And this is the start of the day. So here's the reversal later in the day. But these are 15-minute candles, and you can see that the first 15, 30, 45, hour 15, all of the first part of the morning, I'm asking myself, where are the body of the candles in the NYSE tick? They're clearly well below the zero line, and that is indicating bearishness. What the NYSE tick is telling me is every time a stock in the NYSE has an uptick, it'll move up, and every time it has a downtick, it'll move down. This is the closest thing to real time you can get as far as stocks moving up or down in the stock market. And if you have the majority of the body of these candles below the zero line, then that's really giving me a lot of confidence in a move lower, a continuation move lower. So I watched this very, very closely, and this is part of the market internals that was giving me that confidence. Further, I'm looking at the breadth, and this is telling me the volume of the stocks moving up versus moving down in the NYSE and the NASDAQ. And at one point, it hit negative 2 to 1. But anytime you have a breadth that's at least 1.5 to 1, it's really giving you a clear indication of the direction of the market. And, today was a day that we finally got some clear direction on the breadth. And that really, a combination of the tick and the breadth just made it so easy to sit tight, especially with that volume pouring in on the profile. I really, really loved what I was seeing, and was able to really just sit tight, pretty much stress-free all the way to my target. Also, taking a look here, I do pay attention to the advanced decline line, And this is just telling me the number of stocks in the market that are moving up versus moving down. Obviously, gap down in the morning and a continuation push down. Most of the stocks in the market were moving down. Over 800 stocks were moving down at this point in time. So very bearish sentiment here in the market internals, further giving me the conviction in my trade idea. So I do monitor that. That's part of the new system that I've been using to kind of gauge my trade on the SPY, along with the technicals from the futures market and watching the SPY chart for my entries and my exits. So anyways, just kind of wrap it up here. Again, I think that 9 EMA was sitting roughly in this area, if I'm not mistaken, whenever I was in the trade. So it was on this candle as we washed into that 9 EMA. I sold 75% of my position right into that 9 EMA target hit. Now I left 25% on just in case we could get a move lower. Like I said, a lot of times the 9 EMA will hold support, but it's not uncommon for us to break it. And I really liked the weakness that I was continuing to see in the market internals, and the volume flow on the market profile for the futures were all indicating that while we did bounce up here, we are still indicating a lot of weakness, and most likely we're going to continue lower. So with that last 25% of my position, I put a hard stop in right about break even, so that way I ensured that I didn't go red on the last piece of my position, and I literally just kicked my feet up. My next target, though, for those last shares or last contracts rather, was going to be right here. This is a pivot support on the SPY chart at 298.58. For a couple of reasons. Pivot support is always pretty key. But also, if we did get all the way down there, we would have been very, very extended away from the VWAP, from the 50 EMA, and also we're coming into key reversal time, 10:30 to 11 o'clock, super key reversal time. So it was right here on this doji candle, right over that pivot support when I sold the last of my contracts. So it did come a little bit lower. It's not uncommon for that to happen before we did finally retrace. But I am super, super stoked with that. I honestly, if it really just fell apart even lower, I would not have been upset at all, because my trade plan coming into the day was right and I executed it perfectly. And honestly, that's all I can ask for, is just executing good trades. I've said it so many times before that P&L doesn't matter. And of course we trade to make money, but all I mean by that is, to me, when I execute a perfect trade according to my plan, that's the best feeling in the world. It doesn't matter what the P&L is on that trade. It's, did I execute a good trade? I've had trades that were big winners that were terrible trades, where I had chased a stock or whatever. That, to me, was not as good of a feeling as developing a detailed trade plan and executing that trade plan perfectly. That's the best feeling in the world. And when you get to that point, that's when you know you're making it as a trader. When you can consistently follow your trade plan and execute your trade plan, it doesn't matter what the P&L is, the money will come. When you can do that consistently, the money will come. It's just a matter of sizing up to really increase your profits. So, I mean, at this point in time, the system is still very new to me. As I discussed in previous videos, still very much learning the profile and market internals and things like that. So I just traded very small today on the SPY, just testing the system out still, but I am super happy. I've got about a 76% return. So I honestly cannot complain about that. That's just absolutely fantastic to have a trade just where everything comes into alignment. It doesn't happen all the time, but when it does, it's a great, great feeling. So with that said, guys, I believe I covered pretty much everything I wanted to go over, just kind of show you what I've been working on, how I'm using the combination of the market internals, the futures, and everything to gauge my trades in the SPY. As I said, I would like to get to the point where I can trade the futures market. I'm not quite there yet, but I mean, you guys can utilize this as well for your trades in the SPY. Even if you can't trade options, there's no reason you can't trade equity on the SPY. I've done it before. And in fact, when the market's kind of whipsawing around, it's almost better to trade equity because you don't have the premium meltdown issues. It's a lot easier to stand your ground when you're holding equity versus options, when the premiums can really melt down on you. Excuse me, if the market kind of whips around on you. So with that said, yeah, thanks a lot, guys. Also, congrats again to Alan, who won the giveaway. We did get a hold of him and got him set up with his account at Trick Trades, and he's super happy with that. So I appreciate all you guys participating in that giveaway. Hang in there if you didn't win. I promise we're going to do another one, so you'll have another opportunity to win a 1-month subscription to Trick Trade's guidance membership. And in the meantime, I hope you guys are trading safe as always. I hope you found some value from this video. Feel free to post any comments or questions below. I'm always happy to answer those for you. And in the meantime, hang in there. I appreciate you sticking around for the video, and I will catch you in the next one. Take care, guys.